Well, that's rocket ship we see worrying about an overcorrection in the market. But, moving on from there, construction materials startup Infra.Market has raised $150 million from Varde Partners through the issuance of convertible instruments. Now, Infra.Market, we understand, is looking to go public in the next 18 to 24 months. And this latest fundraise, a part of it, we understand, will be used by the company to acquire a majority stake in Strata Geosystems from US-based Glen Raven. Joining me now to talk about this is Infra.Market's co-founder, Souvik Sengupta. Souvik, thank you for your time here on Startup Street and welcome to CNBC-TV18. If you could start by telling us about this fundraise. The last fundraise you had valued the company at about $2.5 billion. This, of course, is in the form of convertible instruments, so there's no question of valuation yet. But why did you go for this versus equity, and what is your plan for deploying the funds?
So the plan for deploying the funds for us is primarily, like you mentioned, we're acquiring a company in the geogrid geotechnical space. This company works with construction companies and helps them reduce the carbon footprint of their projects, reduce the cost of their projects by using technical textiles in construction, and it also helps them reduce the overall maintenance of a project post-construction. Our target was to acquire this company, and we felt that in the current market environment, issuing convertible instruments gets us the best sort of valuation metrics in the future. And I think that's what we sort of focused on. And since we are going public in the next 24 months, this would be the right way for us to strategize our cap table in the way going forward.
But Souvik, let me come back to that investment in Strata Geosystems. How much of this $150 million are you going to be using to acquire the company? And what happens with the rest of the money?
The rest of the money will be used for growth, primarily. $90 million is what will be go towards acquisition of Strata. Strata India and Strata US, which is the holdco at the moment, and which sort of has the entire global operations.
All right. And you said you plan to take the company public in the next 24 months. Are there certain milestones for the company to meet before that happens? What would sort of be the targets that you're looking at? And are you on track for, what size of an IPO are you looking at?
So we obviously haven't decided the size of the IPO, considering we're still 24 months away. But our track record has been that we are a profitable company in this space. We are close to 100 million EBITDA run rate in this at the moment. We believe that creating a profitable company is in this sector has always been our target from day zero. We've been profitable for multiple years now. And for us, I think the most important focus in the next 24 months is to take this company in a scenario where we are market leaders in at least multiple product categories and market leaders in multiple sectors. I think that is more important for us. So I think we want to show a density in the market, a depth in the market in various product categories. And that is, I think, one of the key criteria for us going public, key milestone, and not necessarily just numbers. It's about us achieving certain amount of category leadership in this industry and being recognized in the industry as a significant player across product categories.
Speaking of being a significant player, Souvik, we just heard Rocket Ship VC talk about how Indian startups should look at a more global opportunity. You've recently opened offices in 2 places abroad. Tell us your plans. I mean, outside of in India, do you see an opportunity? How big could it be?
So like I mentioned, even the company acquired Strata has global operations. Almost 30% of the business comes from global operations.
Yeah.
A large part of our business is global, while India is still a very significant play for us. And we believe the lack of or the opportunity in infrastructure in India is much larger than most of the developed economies. However, India is transitioning to become a manufacturing hub for global clients. And we believe in that India journey. We believe in that, and hence we've set up offices in Singapore and Dubai, like you mentioned. We believe the Middle East, the MENA region specifically, is very accessible through Dubai. And we believe the MENA region is a great place for India to eventually export its products in. Singapore acts as a hub for our global exports in developed markets. And we've set up global operations almost 1.5 years back. And it is just sort of giving results right now for us.
Yeah, so in the MENA region, for instance, are you looking at more acquisitions beyond Strata? Any M&A opportunities overseas?
M&A opportunity overseas for us right now, we are not. We are looking, we want to manufacture in India for the globe. right? So for us, what is critical is having M&A opportunities in India where we can export out of India for global requirements. Whether we will be actually be setting up manufacturing abroad or setting up global operations abroad for other markets is something we are not currently focused on in our next 2 to 3 year journey. Next 2 3 year journey, whatever M&A we'll be looking at will be India specific M&As who can then who have a global market reach. We don't want to go out there and set up operations globally.
All right, Souvik, unfortunately we've run out of time, but it was a pleasure speaking with you, and thank you for being here on CNBC-TV18.
Thank you for having me.
And on that note, it is time for us to head into a short break. But coming up, SAFEARTH, the technology platform for adoption of renewable energy, bags $35 million. What's the fund allocation plan and the growth blueprint? We find out on the other side. Stay tuned.
Welcome back to Startup Street. SAFEARTH, the technology platform for adoption of renewable energy, has raised 3.5 crore rupees in its pre-series A round led by Anthill Ventures, Third Derivative and Mumbai Angels. The venture has completed over 100 industrial solar projects and has deployed capacity of 171 megawatt and claims to have enabled savings of over 300,000 tons of carbon emissions. To elaborate on the road ahead at SAFEARTH, joining me now is its co-founder Anuvrat Sabu. Also joining me is my colleague Arundhati. Anuvrat, welcome to Startup Street. First, tell us how SAFEARTH is helping industries reduce their carbon emissions. If you could elaborate on your solar energy solutions and what kind of efficiency and savings are we talking about? Anuvrat, I think you're on mute. If you could kindly unmute yourself.
Sorry. Hi, Shruti. Hi, Arundhati. Thank you so much for having me. So electricity accounts for a majority of emissions that most industries have. Indian industries are using almost 900 billion units of electricity each year. And here at SAFEARTH, we are focusing on this gargantuan problem. So what we do is that we help industries map their their electricity consumption and help them offset it using renewable energy. So the efficiencies like we spoke about, right? So everyone who is buying a solar system today is buying it for the first time and possibly for the last time, because the solar system typically lasts about 25 years. So that means that the average buyer does not have the technical know-how and the financial know-how of how the system is to be installed. So the SAFEARTH platform allows the consumers to buy the right solar system at the right price with the assured performance. We handhold the customer throughout the journey, right through conceptualization to finance to installation. And in the last 3 years at SAFEARTH, we have generated an additional savings for clients of 40 crore rupees. This is over and above everything that they save from solar.
Right. So you've helped your clients save a bit of money. Hi, Anuvrat. I believe the fresh funds raised will fuel SAFEARTH'S product development initiatives and support your expansion into new industrial belts across the country. So can you elaborate on these plans? What new geographies are you looking at?
Right. So currently we are just in 4 geographies.
Right.
And the biggest ones being Rajasthan and Karnataka. The funding will help us expand into Maharashtra and Gujarat, which are the largest industrial regions in our country. And a very exciting prospect is also expanding into Africa, where we've just completed our first project. So, and on the tech side of things, we are going to use the funds to complete our full stack, which basically means integrating finance, insurance, and other ancillary services on our platform for both the consumers and the construction companies.
All right, so expansion into Africa and, putting in more investments in your tech stack, that's the plan. But, take us through the current business and revenue growth numbers and the revenue models that you've devised for SAFEARTH, and how soon do you hope to turn profitable?
So SAFEARTH has a GMV right now of about 800 crores, and we are growing at about 250 to 300% a year. So, and we were profitable up until last year, but we've invested heavily onto our growth. So now we are just about breaking even. We have 4 sources of revenues. The largest one being the success fee that we get for turning a project. And we have a subscription fee that we charge our vendors and a sign-up fee that we charge our consumers. The 4th segment, and something that is very interesting for us, is the revenue that we are generating from our ancillary services like financing of purchases, insurance of various products, warranty claims, etc.
Right. Anuvrat, why don't you take us through the entire process? How do you map out an industry's electricity consumption and design a solar plant to optimize its energy usage? What's your tech edge, if you could quickly tell us that?
Yes. So we've created a tool that it's a free tool, by the way. So that helps industries manage their electricity consumption. So what it does is that it takes certain inputs like electricity bills, connects itself to a few meters, and maps the entire electricity footprint of the consumer, right? The system then asks for various inputs from the consumer and recommends a system. Let's say it recommends an X system. If the consumer wants to go ahead with it, simply by a click of a button, it can go ahead and host an auction where India's top 50 vendors will then participate and quote for that said project.
Okay.
This is basically what it's done is it's reduced the time for the entire process from 6 months, which is the industry average, to about 15 days. And the biggest thing is that it's reduced the errors and the savings. It has maximized the savings.
All right.
Where we have really made a tech edge, however, is helping the solar construction companies. They're actually the backbone of this industry, and they're really suffering because of reduced margins and increased competition. Okay. And SolarFlow, which is basically our project management tool, enables them to do projects at scale and reduce costly errors to an absolute zero.
Okay.
So right now, these projects, multi-million dollar projects are handled on Excel and WhatsApp.
All right.
And we've basically given them a tool to manage all of that.
Okay. And with one final question before we let you go, we need to talk about your market share. You claim to have 6.67% in the CNI rooftop solar space and 5% in India's overall distributed solar market. You now, in fact, aim to facilitate the reduction of 1 million tons of annual carbon emissions through over 1 gigawatt of solar projects in the next 2 years. What makes you bullish? If you could quickly answer that.
Yes. So very simple. Electricity tariffs are going high every year, and it is really pinching in the Indian industries. In fact, there was a protest in Karnataka just yesterday, right? So this is fueling the renewable energy growth at an unprecedented rate of 45%. The payback of solar systems and wind systems are going down every year. And SAFER just eases the transition for the consumers. So we are naturally going to have a higher growth rate than the industries. So this makes me very bullish, and in fact, we are very confident that we are going to overachieve on the targets that we've set out.
All right, Anuvrat, many thanks for joining us on Startup Street, and wish you the very best for all your plans.
Thank you. Thank you so much for having me.
On that note, it is Friday and it's time to take